Welcome. We're here today to discuss how you actually take a personal policy loan out from start to finish and what do you do when you have that policy loan. The very first thing we're going to go over is actually just one example of one of the insurance company's paperwork for the policy loan. Basically, in this example, it just says application for policy loan. With it, you have your policy number, the name of the insured, and the amount you want to take out for the loan. And that's the first step. This is sent to you that you will need to complete and sign in order to process a policy loan.
And if you happen to live in a community property state and you're married, you will also need to have your wife or husband, your spouse, sign it. It also needs to be witnessed, and it cannot be witnessed by us because we were not there when you signed it. So make sure you have somebody that can witness your signature while you're there.
I've even had a client take it to Starbucks and have the barista sign it as a witness because the barista knew her. So it's any witness, it just cannot be us because we're not there when you actually sign it, and it cannot be an electronic signature. You need to actually physically sign the document.
Once you sign the document, you will send it back to us, Living Wealth, and we will process your loan request. What will happen from there is it will be sent, the paperwork will be sent to the insurance company, and then you will receive a letter from the insurance company saying that you've gotten your check, the date it was issued, the amount, the interest rate is on there from the insurance company. There's also, you'll get a check. Now you can have the loan processed and EFT'd into your account. If you do that, then you will need to also provide a voided check. All of these instructions will be given to you too. If you're one of our clients and you call our office and ask, hey, how do I take out a policy loan? There will be step-by-step instructions with the paperwork.
Now, once you actually request that policy loan, there's another step that you need to take if you haven't already set up. It's called setting up a segregated account. A segregated account is a regular checking or savings account at your bank that has your name on it, but it's for the policy loan. It's for the policy loan to be deposited into and for policy loan payments to go into as well. The reason we ask you to set that up is because we don't want you to commingle your money. We don't want it to be confused with personal money. We don't want it to be confused with income you receive, since it is a loan from the insurance company to you personally.
And we started doing that because we had a client take a policy loan and it went into his personal account, and his wife noticed that there was more money in there than there usually is. So when he came home a couple days later, they had a new couch, and he goes, we got a new couch. She said, yes, there's extra money in our bank account, so I went and bought us a new couch. So we had to come up with a way to make it easy to track, simple to use, and also if your accountant wants to see what funds were loan funds, you can tell that. If you ever got audited by the IRS, you could have a tracking method right there, and it's a simple bank account that only has had loan funds and loan repayments go in and out of. So, as Holly said, was not commingled.
And we call it just a segregated account. So when you see segregated account on a financial GPS, or when we say, have you set up your segregated account, we're referring to that bank account. It does not have to be a checking account, but it needs to be an account that money can go in and out of.
The next thing you would do if you got a check is obviously fill out
A deposit
slip. And then this example was used to purchase some tickets to the Final Four. And so there's a note for the Final Four on the check. It was made out to MasterCard. And when the bill came, made out the check, $13,000, and sent it to MasterCard. But that's not where it ends, because this is banking. So we want to make sure we get our money back.
So the next step is once you have this loan, you need a loan amortization schedule. This first example is a loan amortization schedule that the insurance company is charging you. This is the rate of interest for the loan. In this example right here, you have a monthly payment schedule, you have the terms and conditions, and what you're going to be paying on a monthly basis. We can provide these for you as well. We just have to know what it's for and be able to track it. You need this as well for your accountant, because at the end of the year when he says how much interest have you paid, you can very easily and quickly pull out your loan amortization schedule, and if you followed it, just submit this to your accountant and they can very easily track the information for you.
The other schedule is what we have put IBC rates, for infinite banking concept rates. Obviously, the insurance company has an interest rate they charge you. Most of the time, it's around 5%. But if you were going to pay yourself back, most people go, oh, I can afford $400 a month. I can afford $200 a month. They come up with the number and the time period. And in this case, the interest rate was 8%. So the difference between the insurance company's rate and this one is 3%. But the dollar figure is around $20. So the reality is, at the end of the year, you're going to want to figure out how much extra interest you paid with your rates, and then you're going to want to actually apply that towards the paid up addition rider. That's a whole nother lesson. It's a whole nother segment, but we break it down in two ways, the insurance company's rates and yours, so you make sure you recapture every dollar that you've spent on anything you've purchased.
Now with the insurance company interest rate, when you get your anniversary statement, you want to pay the interest that the insurance company charged you. That goes directly to the insurance company in a separate check, and it's interest payment. The actual extra money that you paid on your IBC goes into the paid up addition rider, and that cannot be done monthly. You cannot give the insurance company that extra money on a monthly basis. It has to be on your anniversary date of your policy. So when your anniversary date's approaching, if you don't know what that amount is, please call our office and we'll sit down and figure it out with you, so you know exactly what you're giving to the insurance company in paid up addition riders and what you're giving to them in regards to the actual interest rate that's owed on the policy loan.
If you have any other questions, then please contact our office at 1-877-842-0956, and we'd be happy to help you.